My friends, I need you to stop what you're doing right now because something major just happened with Social Security, and it's going to affect millions of Americans who depend on these benefits every single month. I'm talking about real changes that started just days ago, changes that could mean more money in your pocket or, if you're not careful, less money than you're expecting. Now, I know how confusing all this government talk can be. You've worked your whole life, paid into the system for decades, and now you just want to know one simple thing. How much money am I getting, and when is it coming? That's exactly what we're going to talk about today, and I promise you, by the time we're done here, you're going to understand exactly what these 12 big changes mean for you and your family. Whether you're on regular Social Security retirement, SSDI disability benefits, or SSI, these changes are already in effect, and some of them are pretty surprising. I've been doing this for years, helping folks just like you navigate this complicated system, and I can tell you that what's happening right now is some of the biggest news we've seen in a while. So grab a cup of coffee, get comfortable, and let's walk through this together step by step, just like we're sitting across the kitchen table from each other. The first big change that just started is the official 2025 cost of living adjustment, and I want to make sure you understand exactly what this means for your monthly check. The Social Security Administration announced a 2.5% COLA increase for this year, and while that might not sound like a huge number, it actually adds up to real money in your account. If you were getting the average retirement benefit of around $1,907 a month last year, you're now looking at about $48 more every single month. That's nearly $600 more over the course of the year. For those of you on SSDI, the average benefit went from around $1,537 to about $1,575. And for our SSI recipients, the maximum federal payment increased from $943 to $967 for individuals. Now, I know some of you are thinking, that's not enough to keep up with my grocery bills, and I hear you. But here's what you need to understand. This COLA is based on the Consumer Price Index, and it's the formula Congress uses. The good news is that this increase is automatic. You didn't have to apply for it, and it should already be showing up in your January payments. The second change that just went into effect is the new earnings limit for people who are still working while collecting benefits. And this is actually good news for many of you. If you're under your full retirement age and you're still working, you can now earn up to $23,400 in 2025 without having your Social Security reduced. That's up from $22,320 last year. Here's why this matters. Let's say you're 64 years old, you're collecting early retirement benefits, but you picked up a part-time job at the hardware store or you're doing some consulting work. As long as you stay under that $23,400 limit, you get to keep every penny of your Social Security check. But here's where people get tripped up. If you go over that limit, Social Security will withhold $1 in benefits for every $2 you earn above that threshold. So if you earned $25,000, that's $1,600 over the limit, which means they'd reduce your benefits by $800 for the year. Now, if you're reaching full retirement age this year, there's a different higher limit that applies only to the months before you hit that milestone, and that limit is $62,160. Once you reach full retirement age, there's no earnings limit at all, and you can make as much as you want without losing a dime of your benefits. The third major change involves Medicare Part B premiums, and this one is really important because it directly affects how much money actually lands in your bank account each month. The standard Medicare Part B premium for 2025 is now $185 per month, which is up from $174.70 last year. Now, for most of you, this premium gets automatically deducted from your Social Security check before you ever see the money. So even though you got that COLA increase I mentioned earlier, you're also paying about $10.30 more for Medicare Part B. When you do the math, If your COLA increase was $48, but your Medicare premium went up by $10, your actual net increase is closer to $38. This is something a lot of people don't realize until they see their first check of the year and wonder where all that COLA increase went. The good news is that there's a rule called the hold harmless provision that protects most Social Security recipients from having their net benefit reduced because of Medicare premium increases, but this doesn't apply to everyone, especially if you're new to Medicare or if you're a higher income earner. The fourth change deals with the Income-Related Monthly Adjustment Amount, or IRMA, and this affects those of you who have higher incomes from pensions, investments, or other sources. If your modified adjusted gross income was above a certain threshold 2 years ago, you'll pay more for Medicare Part B and Part D in 2025. For individuals, if you made more than $103,000 back in 2023, or more than $206,000 if you're married filing jointly, you're going to see higher Medicare premiums deducted from your Social Security. These IRMA surcharges can range from an extra $66 a month all the way up to an additional $407 a month for the highest earners. I've talked to so many people who are shocked when they see these deductions, and here's my advice. If your income has gone down significantly since 2023 because you retired, lost a spouse, or went through a divorce, you can file Form SSA 44 to request a reconsideration. Social Security might adjust your IRMA based on your current circumstances rather than your income from 2 years ago. The fifth big change is about the taxation of Social Security benefits, and this is something that catches a lot of people off guard. The income thresholds that determine whether your benefits are taxable haven't changed in over 40 years, which means more and more seniors are finding themselves owing taxes on their Social Security. Here's how it works. If you're single and your combined income, which includes your adjusted gross income, your non-taxable interest, and half of your Social Security benefits, exceeds $25,000, then up to 50% of your benefits could be taxable. If it exceeds $34,000, up to 85% could be taxable. For married couples filing jointly, those thresholds are $32,000 and $44,000. With the COLA increase, some of you might cross over these thresholds this year, even though your actual purchasing power hasn't increased. My suggestion is to talk to a tax professional about whether you should have taxes withheld from your Social Security check using Form W-4V, so you don't get hit with a big bill and potential penalties when you file your taxes next April. The sixth change involves the windfall elimination provision and government pension offset. And while these rules haven't been eliminated yet, there's been a lot of talk in Congress about reforming them. The WEP affects people who worked in jobs where they didn't pay Social Security taxes, like certain teachers, firefighters, or police officers who have government pensions, and then also worked other jobs where they did pay into Social Security. The WEP can reduce your Social Security benefit by up to half of your pension amount, with a maximum reduction of $512 a month in 2025. The government pension offset affects surviving spouses and can reduce spousal or survivor benefits by 2/3 of the amount of your government pension. These rules have frustrated people for decades because they feel like they're being penalized for public service. There's a bill called the Social Security Fairness Act that was passed by Congress and is aimed at repealing both the WEP and GPO, and if it becomes law, it could mean significantly higher benefits for about 3 million Americans. This is definitely something to keep your eye on. The seventh change is the new maximum taxable earnings limit, which went up to $176,100 for 2025. Now, this probably doesn't affect most of you directly if you're already retired, but here's why it matters. If you're still working, or if you have adult children who are working, they're now paying Social Security taxes on a higher amount of their income. This means they'll potentially qualify for higher benefits when they retire. It also means that high earners will pay more into the system this year, with a maximum Social Security tax of $10,918.20, up from $10,453 in 2024. This is how Social Security stays funded, and it's important for the long-term health of the program that supports all of us. The eighth change affects SSI recipients specifically, and it's about the new rules for food assistance that just took effect. For years, if someone helped you pay for food or gave you groceries regularly, Social Security could reduce your SSI payment by up to 1/3. This was called in-kind support and maintenance, and it was incredibly complicated and unfair. Starting in 2025, Social Security is no longer counting food assistance as income for SSI purposes. This means if your kids bring you groceries every week or if you eat meals at a friend's house, it won't reduce your SSI check anymore. This is a huge relief for people who were literally afraid to accept help feeding themselves because they didn't want their benefits cut. However, if someone pays your rent or mortgage or utilities, that can still affect your SSI, so you need to be careful about those arrangements. The ninth change involves the trial work period rules for SSDI recipients, and this is important if you're thinking about trying to go back to work. In 2025, any month where you earn more than $1,050 counts as a trial work month. You get 9 trial work months in a rolling 5-year period, and during this time, you can still receive your full SSDI benefits no matter how much you earn. After you've used up your 9 trial work months, you enter what's called the extended period of eligibility, where you can still get benefits for any month you earn under what Social Security calls substantial gainful activity, which is set at $1,620 a month for 2025. I know this sounds complicated, but the bottom line is this. If you're on disability and you want to test whether you can work again, these rules give you a safety net. You can try working without immediately losing your benefits, and if it doesn't work out, you're protected. The 10th change is about representative payee requirements and monitoring, and Social Security is cracking down on this more than ever before. If you're a representative payee for someone else, meaning you manage their Social Security benefits for them because they can't do it themselves, you now have stricter reporting requirements. You must file an annual report accounting for how you spent the beneficiary's money, and Social Security is using more technology to detect fraud and misuse. On the flip side, if someone is your representative payee, you have more rights now to request a change if you feel they're not managing your money properly. I've seen too many cases where a family member becomes a payee and then uses the money for their own expenses instead of taking care of their loved one. Social Security is taking this more seriously now, which is good for everyone. The 11th change deals with the expedited reinstatement process for people whose benefits were stopped. If you were on SSDI or SSI, your benefits ended because you went back to work or your condition improved, but now your condition has gotten worse again or you can't work anymore, you can request expedited reinstatement without having to go through the entire application process again. The time limit for this used to be 5 years, and it still is, but Social Security is now processing these requests faster and providing provisional benefits for up to 6 months while they make a decision. This can be a financial lifesaver if you're suddenly unable to work again and you need that income restored quickly. The key is to file the request as soon as possible and provide updated medical evidence showing why you can't work. The 12th and final change I want to talk about is the updated online services and the new My Social Security portal features. Social Security has been pushing everyone to manage their benefits online, and they've made some significant improvements to the system. You can now update your direct deposit information, request a replacement Social Security card, get benefit verification letters, and even start a disability application all through your online account. They've also added better fraud protection with multi-factor authentication. I know some of you aren't comfortable with computers, and that's okay. You can still call or visit an office, but I encourage you to at least have a family member help you set up an account because it really does make things easier. You can check your payment history, see exactly when your next check is coming, and catch any problems early. My friends, these 12 changes are all in effect right now, and they represent some of the most significant updates to Social Security, SSDI, and SSI that we've seen. The most important thing you can do is stay informed, keep good records, and don't be afraid to ask questions when something doesn't look right on your payment. If you notice that your check is less than you expected, call Social Security right away. If you think you might qualify for additional benefits or credits, apply for them. And if you're confused about any of this, reach out to someone who can help you understand it. You've earned these benefits through a lifetime of hard work, and you deserve to get every penny you're entitled to. Keep watching for updates because things change all the time in this world of government benefits, and I'll be right here to help you make sense of it all, just like we've done today.